So Amazon stock is a very special case because most people that look at the company are very bullish on them in the long term, and with how much they're already dominating and all of the future potential that they still have. And when looking at the stock, it's already up over 230% in the past 5 years, which is extremely impressive. And at one point in 2018, the company actually reached a $1 trillion market cap and was trading at over $2,000 per share. But with all the recent market volatility, Amazon stock has been absolutely destroyed lately, dropping by over 30% in the past 3 months alone. And when you look at their high of $2,050 per share versus their current price of $1,343 per share at the time of this recording, that represents a drop of almost 35%. So naturally, I've been receiving a lot of questions about Amazon stock, and mostly because I'm actually an Amazon shareholder myself. So I've been getting asked, am I buying any more of the stock during this market correction, or am I holding through the volatility, or am I actually just giving into the fear and actually selling out of my position? These are all great questions. I'm going to give my full opinion on Amazon stock. We're going to talk about how the company is performing, where I think they're headed in the future, all of that kind of good stuff. I'm going to cover all of it and share my opinion with you guys in today's video. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. So the way we're going to do this today is we're going to start by going over the company, just kind of a brief summary. Then we'll talk about their recent performance. We'll talk about their future potential, how much they're dominating already, all that kind of business related stuff. Then we'll transition to the stock. So then we'll talk about the stock and their valuation. We'll even cover the balance sheet. And then at the end of the video, I will share my overall opinion and conclusion and let you guys know exactly what I'm doing as an Amazon shareholder. Okay guys, starting with the business, Amazon is mostly known for their Amazon.com website that sells almost any type of product out there online in a very convenient way. So it's like having your own personal shopping mall right at your desk, and that alone is a very powerful selling point to any potential investors. And I say desk, but really a lot of people buy Amazon products just through their smartphone, so it's kind of like having a mall wherever you go. But there's really much more than just those things to Amazon's business. For example, they own the world's leading cloud computing platform by market share in Amazon Web Services, even ahead of Microsoft, Alibaba, and Google. And this past quarter alone, that segment grew sales by over 45% year over year, and year to date, it grew sales by over 47% year over year. On top of that, Amazon Web Services is really where Amazon is getting a lot of its profit, considering that the other two segments aren't nearly as profitable, but they are still growing at a fast rate. Now, their North America segment only has an operating margin of 5.9%, but that's up from just 0.4% the year prior, so that's a huge growth there. And then their international segment is not profitable yet, but it has been improving at a pretty fast rate. When looking at their operating margin, it grew from almost negative 7% last year to just negative 2.5% this latest quarter. Still, it's really their Amazon Web Services segment that is the absolute profit beast that is propelling strong earnings for the company, coming in at a massive margin of over 31%, which is up from 25.5% the year prior. On top of that, Amazon has their toes dipped in the video streaming market with Prime Video, the music streaming market with Prime Music, and they even have their own video game division, along with the largest video game viewing through online streaming service on the planet in Twitch.com, which is an important play on the future of esports, which according to Newzoo.com, which by the way is a gaming analyst website, the esports audience grew from 281 million people to an absolutely massive 380 million people in 2018 alone, and revenue looks even more impressive, coming in at a year-over-year increase of 33% in 2017 to a 38% increase in 2018, with total revenues increasing from $493 million in 2016 to almost double that amount at over 900 million in 2018, with projections to increase to well over $1.6 billion by 2021. Not to mention that the video game market as a whole is growing by billions of dollars every single year and will be fast approaching a $2 trillion market worth within the next few years. And when looking at Amazon's Prime subscription service, it's estimated by The Motley Fool that Amazon will account for almost half of all e-commerce sales in the US in 2018, with over 60% of those customers being Prime members that spend double what a non-member spends. So Amazon is really building up a loyal subscriber base that spends more money than ever before. And speaking of retail, it's being reported that JMP Securities raised their price target to over $2,000 per share and cited a survey of 250 companies that estimate holiday e-commerce sales to have jumped 20% year over year in November, including Black Friday and ending on Cyber Monday, which is actually higher than the 17% jump from the year prior, and over 70% of those shoppers started their online search on Amazon. And this growth is likely to continue, considering that only 12% of global retail sales are even done online, with even less in the US at only around 10%. And speaking of the US, eMarketer reported back in July that Amazon controls almost 50% of the US e-commerce market, which is up from 43.5% the year prior and will accelerate to 54% in 2019. And all of this retail growth is likely to really help Amazon's online advertising business, because as more businesses want to sell their products on Amazon's platforms, they have to compete for attention, which leads to advertising. They got to basically spend to promote their products, and this leads to much higher ad rates, which is very good for Amazon's online advertising business. In fact, when looking at Amazon's other segment, which pretty much comprises of their online advertising business, that segment grew by 132%, 129%, and 123% in each of the last 3 quarters respectively, which pretty much means that they're growing by triple digits in all 3 of their last quarters. And it may even be on track to reach $10 billion in annual revenue for fiscal 2018, and very likely to be much more than that in the coming years. And once again, their growth is likely to continue, considering that ad spending is increasingly shifting away from television to digital advertising, which accounts for hundreds of billions of dollars in ad spending every year and is expected to approach $500 billion within the coming years, according to eMarketer. That's a big deal, because if you consider that Google and Facebook really control that market, that means that there's plenty of market share for Amazon to steal, whereas the others may have more to lose. In fact, here's a chart also with eMarketer data showing just how much higher Google and Facebook are compared to Amazon, but again, this leaves market share for Amazon to steal, which leads to more growth. And finally, I'll just quickly mention that one of the biggest strengths to Amazon's business is that they can collect a ton of data from consumers using any of their services or platforms or products, including their new lineup of connected home products featuring their virtual assistant Alexa. And all of this data is very attractive to advertisers, which is helping Amazon grow that business even further. And they're not just stopping with home speakers, but they're making all kinds of different connected home products that even include kitchen appliances, as well as venturing out to your vehicle with the new Echo Auto. Now, moving on to their recent earnings and performance, we can see that in their latest quarter, revenue grew by almost 30% year over year, and net income increased by over 1,000% year over year, with almost $6 in EPS. Not to mention that free cash flow increased to over $15 billion in the past year versus only $8 billion the year before that. So for all the people that always give me so much heat in the comment section about investing in Amazon because it trades at such a high valuation, my kind of counter argument to that is sometimes you actually get what you pay for, right? You hear that a lot, and sometimes that applies to the stock market world too. If you want that really high growth, right? Amazon growing revenue by around 30%, earnings by 1,000%. If you want that kind of growth and you want that kind of dominance, with still a lot of future potential, you're probably going to have to pay a premium, and that's kind of how I see it with Amazon. And speaking of that rich valuation, Amazon currently trades for around $1,300 a share and has an enormous market cap of over $650 billion. Their trailing PE is also extremely high at over 75, while their forward PE is still very high as well at around 50. But when you factor in future growth, you get a PEG ratio of about 1.5, which is actually pretty good and similar to some other very big and very popular companies out there like Microsoft or even Google. Still, there are definitely some cheaper options out there like Apple or Facebook, for example. So I do think that Amazon is definitely expensive, and even their other ratios are also pretty high as well, like their PS ratio being at almost 3 and their PB ratio being pretty darn high at 17. And speaking of that PB ratio, that brings us to their balance sheet. Now I'll explain and summarize it all in just a second, but looking at some raw numbers, their cash and current assets declined slightly this year to just under 60 billion, while total assets increased to around 144 billion. Looking at liabilities, current liabilities came in lower at 55 billion versus the current assets of 60 billion, so it's just a little better than like a 1-to-1 ratio, and long-term debt and liabilities came in a little higher at almost 50 billion. Now, stockholders' equity increased to almost 40 billion, which is good, but it's still very low compared to their market cap, which is why they have such a high PB ratio of almost 17. So overall, I think their balance sheet is good. It's not anything to be concerned about. It's not necessarily something that I'd go around bragging about. You know, their asset to liability ratio is just a little bit better than like a 1-to-1 ratio, but still, you know, equity is at like 40 billion. They can definitely make some moves. They definitely have the resources to keep making acquisitions if they need to. You know, they just recently acquired PillPack for the online pharmaceutical market. So this is really a company that keeps reinvesting in itself, keeps making moves and little acquisitions here and there, and just kind of slowly taking over different areas and different like industries and stuff. So, you know, their balance sheet is not anything I'd be concerned about. It's not a balance sheet that I ever expect to be like a 3-to-1 ratio or something like that. It's going to still have some good equity. It's going to still have some pretty high assets, and it'll be able to make some moves if it needs to. It's good. Nothing I'm concerned about. That's just kind of how I feel about their balance sheet. So moving on to my final conclusion. Now, if you want my opinion on Amazon stock and what I plan to do and all that kind of stuff, you have to first understand what type of investor I am. I am a little bit more of a growth investor than a value investor. I'm a long-term investor. I believe in dollar cost averaging, although I modify it. You know, that's another thing that I kind of haven't really specified a lot on my channel. I need to do a video on that because I kind of modify my strategy a little bit. But in any case, because I'm that type of investor, when stocks are going down, I'm still buying. I'm actually buying more when stocks go down. So the fact that Amazon is actually dropping in price just makes it much more attractive to me. So I am actively buying Amazon whenever my budget allows for it. And I still believe in Amazon in the long term. I have no doubts in my mind. In my opinion, I think Amazon is going to have a very bright future. Yes, they're a little expensive, but like I said, I'm a bit more of a growth investor than a value investor. Now, if you're a value investor or even if you're a dividend investor, then obviously Amazon is not going to really be the ideal stock for you. And so a lot of people really hate Amazon for some of those reasons. But, you know, as a growth investor, as a long-term investor, you know, and with all the market volatility bringing down the price, yeah, I'm personally actively buying Amazon, and I'm still as bullish as I ever was with Amazon stock. But in any case, you guys always have to do your own research, make your own decisions. But let me know in the comment section how you feel about Amazon stock. I'd love to read all about it. If you're bullish, bearish, doesn't matter. I'd love to read it and we can have a discussion. I think it'd be a lot of fun. So let me know in the comment section how you feel. I hope you enjoyed this video. Please hit the like button if you did. It really helps the channel survive and grow. And I really appreciate all that support, guys. It means a lot to me. And I think that's about it. So I will catch you guys in the next video. Have a wonderful, beautiful day. Take care. Stay safe out there with all the market volatility. And I'll catch you guys later. Bye-bye.